Hello and welcome. I do hope that from the last sessions that we've had, you have been actioning all that you've been learning from our previous sessions. Today, we are going to be learning about tax. We know that tax is jurisdictional. It's very different for every country. Obviously, tax laws are different by country, but there are common mistakes which apply to all jurisdictions that we make as entrepreneurs. So today, we decided to entitle our class the tax mistakes that entrepreneurs make. So we will be learning, obviously, those mistakes that we make, what others have done wrong. We have the privilege of learning from an expert who has worked with various entrepreneurs, who has seen it all. You'll be learning from some of my own mistakes, and so it's wrong for you to go on and make the same mistakes that others have made. So it's a privilege that we get to learn from the mistakes that others have made. Obviously, we will also be picking up tips today on how to avoid such mistakes. But most importantly, we're going to be learning about our responsibilities as entrepreneurs on the tax front, what the tax man will hold us accountable for. So those are the three key points that I feel we should pick up, listen and learn today. Obviously, there will be some learning points that you also pick out, and it will be nice to hear what we can discuss in the end as we hold our debates and understanding of tax. It's very important that you listen in, even if an example is given for tax that applies in a different jurisdiction. Please do stay attentive, because it could still apply in your own jurisdictions with just minor variations. So some tax examples will be relating to one country or the other, but they might as well just affect you. So please pay attention and share with those who are with you on what it is that you've learned today.
Build yourself. Immerse yourself in practical knowledge. Learn from the doers. And get doing with Serala Entrepreneurship College.
Today we're going to be learning all those mistakes that we're speaking about from our own personal friend who happens to be a tax guru. We've learned so much from him over the past couple of months, and we thought it was very relevant for him to join us and open this class to all of you. So Tumelo Rana, welcome to our studio.
Thank you so much, Avi, for inviting me to your studio. I'm looking forward to imparting knowledge and also learning from you.
Very interesting, because the fun fact about today is Tumelo used to be my student many years ago. So now he's grown, he's a guru in his own space, and I get to be your student. So I'm very humbled and very proud of you, and thank you for creating time to share with us the tax mistakes that you see entrepreneurs making. May I volunteer one mistake? I think we'll call it mistake zero.
Go ahead.
I think the mistake that I feel at the very basic level is learning about tax as entrepreneurs, because tax in itself is a complicated topic. So we sort of feel maybe it's above us. Unfortunately, we learn when it's too late. So that is I guess the worst mistake that we make. So that's why we're hoping that today, even those who are tuning in will listen in to the very end, and we learn what we can from you.
No, you are right. It's one of the mistakes that people make. They don't learn. They don't actively go out to seek knowledge, but rather they wait for someone to come to them with that knowledge, which shouldn't be the case, because you should be proactive as an entrepreneur and know what is your tax obligations.
Right.
So it's very good that you mentioned that. You are right, that is one of the mistakes that entrepreneurs make. But at the top, is poor record keeping.
Record keeping.
That's the problem that we often face as tax specialists when we help entrepreneurs, whether it's compliance or it's planning. But the cornerstone of those two really is record keeping. If your records are in order, then we are able to assist you in complying. That is making payments and all that, preparing returns, and also planning your affairs in such a way that you will pay the least possible amount of tax that is payable. But if your records are in disarray, then it just makes the work difficult for us as tax specialists. So whether you talk of expenses, whether you talk of income, you have to have a sharp record keeping. Because if your record keeping is poor in this aspect, you can lose out on some claims, whether it's from expenses, or you can end up paying high taxes because of that poor record keeping.
Wow, before you carry on, I like that, because I think usually when we think about tax, we're thinking about paying tax. We never think about the claiming side of it.
Yes. Most people think about paying only because they have this perception that, the tax man is
out to get my money.
Out to get my money. I don't want to hurt the tax man. I just want to make sure that I pay whatever that I need to pay, without realizing that sometimes it's not about even pay. It's about claiming back from the tax man. So
you said this in passing, tax planning. What is that?
Yes, tax planning is basically arranging your affairs in such a way that you can pay the least amount of tax payable. Because if you don't do any tax planning, for example, you can pay 100,000, but someone who's doing tax planning can pay 50,000. Yeah.
So it's
but both you are still within the law.
Right.
Yes.
Okay.
So
is that where maybe
it.
You could maybe explain to us what tax evasion is versus tax avoidance, because I think that's what you're speaking to.
Yes.
Yeah.
So normally we try to use the word planning because avoidance and evasion, from a tax authority point of view, is the same thing. Yes.
Okay.
It's the same thing. So
yeah,
we use tax planning in our industry.
I see.
So evasion basically it's you breaking the law, in simple terms.
Right.
You are not paying tax, but you are breaking the law. Or you are paying a low amount, but you are breaking the law. While for planning, you are paying the least possible amount,
but within the law. Okay.
Within what the law dictates. You are using the schemes that are within the law. Yes. So basically those are the differences.
Fantastic.
So there are consequences of not you keeping those records that I was talking about. When, for example, when it comes to income, you need to ensure that you have your invoices in place.
Right.
Whenever someone pays you, ensure that there is invoice for that payment. Or whenever you receive an amount, make sure that there is some documentation that explains what that amount is. If it's a loan, let there be a documentation that this is simply a loan, whether it's from a friend, whether it's from a private institution, whether it's a financial institution, or let there be some form of documentation. Because tax authorities can estimate your income and then they can use your bank statement to say, okay, whatever that has come in is your income. While in fact, sometimes it might be a loan, or it might be a transfer where you have multiple bank accounts. It might be a transfer from one business account to the other.
Right.
Yes. So it is important that we have such documentation. I think a classical example in Botswana.
Before you do, so what are you saying? Are you saying if I get a loan for my business from a friend, I know if it's from a bank it will probably show, but if it's maybe from a friend and they're giving me a loan, and usually we don't write any agreements, you're saying it's important to have those agreements.
It's important to have that agreement. Yes.
To show this documentation, like this is a loan, it's not income.
It's not income.
Because then I would pay tax on the loan.
Tax on the loan while you are still going to pay back your friend. Yes. So it is important that for every transaction you make, where possible, there is documentation, especially for things like your loans. Because for loans it will be larger amounts. Yes. So it is important that you have documentation for such. Yes. So I was saying there's a classical example in Botswana of the Gudulu or prevailing securities case, where from the court records, you hear that the prevailing securities was saying we these are loans.
Right.
But then from a tax authority perspective, they treated that as income because no documentation was availed to prove that this is a loan. And they were saying these are transfers from one business account to
another.
But there was no evidence in terms of documentation to say, no, this is just simply a transfer from one business account to the other.
And so there's no negotiating with my mouth to say, I mean it, I swear on my grandma's,
In our field, we work with documentary evidence. So as long as there's no documentary evidence, then unfortunately, we can't help you. And this principle is universal.
It's universal.
It's not just only applicable here in Botswana. You go to Kenya, you go to South Africa, even outside Africa, you find that the tax authorities, we have used that method of estimating your income. Estimating my income. Yes. So the reason why there is an estimate is simply because you don't have any records in place.
And may I ask, if the taxman can estimate my income, what you're saying is, I can't estimate. I can't tell them, no, for that expense, I think it was around this much.
Yes. Because you can't, because you are expected to have those documents in place.
And the taxman can estimate.
And the taxman can estimate. They'll simply say, no, you are negligent, so we can't trust what you are saying.
Right.
Yes, but because you are negligent, we'll go to the bank, ask for bank statements, and then estimate income from those bank statements. Or in a case where you don't have a bank account, they can say, in your industry, this is how much people
industry based.
Yes, so they can estimate based on the industry and say, such and such a college makes this amount of money. You are similar size, so this is the tax that we are going to charge you, and then you can contend that. Yes, but for you to contend it, you need to come up with evidence.
So it's an evidence-based approach. Basically, like you always say to me, the burden of compliance lies with me.
Yes, the burden of compliance lies with you as the taxpayer. So from that you are going to pay more tax, and not only tax as the principal. There's going to be penalties, and in which this case they can say you were evading or avoiding tax, and then they charge you 200% penalty, and over and above that charge you interest, and this interest can be more than the principal that they're going to charge you. So you find that if you are owing 100,000 pula in tax, you can end up paying 150,000 pula interest.
Whoa! So I can have interest that is more than the principal.
Yes. Can have more interest
and then end up paying the 100 that I owe and the 150, end up paying 250.
Yes, and there can be penalties over and above that, because the principal, the penalty, and the interest are 3 separate charges. Yes. So it's not, for interest, it's not like where you get a loan from the bank and then say the loan is limited to the principal that you got, where there's the induplam rule that limits the interest that you can be charged at a point in time. So for tax, because it's a statutory charge, there's no limit as to how much interest they can charge you.
Whoa.
Yes.
So if I am seen to have evaded tax, maybe taken away my records for whatever reason, and it's the taxman sees that as maybe I was evading tax, and they charge me the principal, and they charge me interest. Based on maybe the number of years or whatever the period, that interest can be more than the actual tax that I was owing.
So that's why it is very important
to keep records.
To keep records, ensure that you always have your invoices. Yes. So when it comes to expenses, you also need to ensure that your records are in order, because you can lose out on claims. Remember, when you are being taxed, they look at your income and then your expenses, then they charge you tax on the profit. That is from an income tax perspective. So when they come in and audit you and they find that you don't have documented evidence for those expenses, they can then write off those expenses and say, no, we don't recognize these expenses because there's nothing to prove that you have incurred these expenses. So then they write them back, meaning you are paying more tax, and because you would have declared your profit, you're going to pay now on the income, and it means you are paying additional tax. They will charge you interest, and then they charge you penalties. So for those who are registered for VAT, there's what you call input tax, which is basically the VAT that you've incurred in the expenses when you are paying your suppliers.
Yes.
So if you don't have documentary evidence for that, and yet you claim, or you have been given those invoices and then you lost them, and then they come in and audit you, investigate you, then you don't have such to prove that indeed you incurred that expense. Then they're going to write it off, because there's nothing to prove,
to show,
yes, that you indeed incurred. So they'll still write that off, and then you pay additional tax.
You know, as an entrepreneur, Tumelo, some expenses happen when we are running helter-skelter, putting off fires. Our lives get so busy. Do tax authorities accept, proof of expense if I took a picture of the receipt? If it's digital like that?
It can be stored digitally.
Even if I was given a hard copy.
Yeah, even if you're given a hard copy, but it will be advisable to have it as a PDF. Maybe instead of
a picture. Right.
PDF will be user friendly.
Because that's more practical to just take a picture, especially if you're not using a business card and there's no record on the income on the bank statement. If I'm using cash and I'm on the go, just to take a picture and know that I can convert it to PDF.
Exactly. What I've seen clients losing out on, it's on what you call the input tax.
Input tax.
Yes. So for VAT, remember there's output.
Meaning?
This is what you charge on your sales.
The VAT that I charge people.
Yes. Then this is on the expenses. So you find out most customers will just pay this portion, while they should be paying this less this.
When you say customers, you mean who?
Clients, taxpayers. So because they don't keep this, but they are charging VAT, they are only paying on the sales, on what they are charging to their customers.
Yes.
And then because they don't have this, they've lost those. They haven't kept those. They are paying. If you have charged 120 pula
to my customers,
to your customer, and you have lost out this, that means you are paying 120 pula to the tax authority.
So if I'm VAT registered as an entrepreneur, my business is VAT registered, and I'm charging my clients a total VAT of 120.
Yes.
And I lose the documentation on the VAT that I have also paid to others who were charging me.
Yes.
Right. Then I end up paying 120 in full.
Yes.
Okay.
So for those who keep their records, this is the scenario. Output, $120.
Yes.
Then input, or what they get from their suppliers.
Yes.
100 pula.
I end up paying the taxman 20. I love this. Okay, so it's important to keep records on the tax that I am also paying. In this case, the VAT.
Yes.
Okay.
In this case, the VAT.
I hope it makes sense to my students. If somebody,
I hope so.
Okay, so this is output tax. This is the tax that I have charged my clients, and the VAT amounts to 120 that I must give the tax man. But others have charged me VAT.
Exactly.
And I've kept records in this instance.
Yeah.
So I have 100 that I have also paid out in VAT. So now all I need to give the tax man as a business is 20, the difference for VAT. Okay. Exactly. But if there's no record, I pay the full.
Now moving on to the expenses side, we've talked about income.
Yes.
So we'll deal with income tax and VAT still when it comes to record keeping for expenses or input tax purposes. And as I've said earlier, compliance is an evidence-based exercise.
Right.
Yes. So whatever you claim, you should be able to prove that indeed you incurred that, and you can only prove through an invoice. Yes. So for income tax, if they come and audit your affairs as an entrepreneur, and there are no invoices, but you have claimed expenses using those invoices, they can just write that back and then charge you tax just on your income. So just to give you an example,
Yeah.
if your profit was 500,000,
This is profit.
this is profit, and maybe your income was 1.5 million, meaning your expenses
Well,
was
1
1
million.
million. And then you don't have documentary evidence, maybe for half of these.
Yeah.
That means they're going to add and make your profit $1 million. So you are paying tax on this additional
Amount.
amount. And
Okay.
then this is the principal,
Right.
and then they charge you penalty.
Why
They
would
say
be
you are paying expenses that are artificial. They will say they're artificial because you don't have the evidence to. You pay
So-
the penalty, sometimes that is the same as this, and also you pay interest. You pay interest on this amount, compounded. So if it was over a period of 5 years, it will be compounded for over 5 years, and it will be more than the 1 million that you the tax amount that you are paying.
slow down so that I can be sure I understand. So what you're saying is, if I made 1.5 in revenues, that's my income. There's a zero missing there on the 1.5.
Oh, yes.
And then my expenses were 1 million. Then I report a profit of 500,000 to the tax man.
Yes.
That's the one I should be taxed on.
Yes.
But when I'm asked to provide evidence of the expenses, I'm only able to provide documentation for 500,000 from that 1 million. The taxman will add it back and say, no,
Yes.
the expenses that you could not provide evidence for are added back to that profit, and you are charged tax on 1 million.
Yes.
So what are you saying here? The 500 that I would have not provided evidence
Yeah, you
for
are paying
as
tax
expense,
on
I'm having to pay tax on that. Yes, I
Yes.
get that.
Yes.
And then they penalize me for, what are you calling it?
It's a penalty.
It's a penalty.
Yeah, this one is a penalty. They say you should have paid tax, but you have underdeclared it. So they are
Right.
charging you. Sometimes they can say 200%
Whew.
maximum. So if this was 120, penalty will be 240.
Right.
Yes, and then they charge you interest over this 120, depending on how long it has been.
Yeah.
It can even be 200,000 more than the principal
That I could have paid.
that you could have paid. So that is why it is important that you keep your invoices.
Wow. So you know what I'm actually marveling at more than anything?
Yes.
Is that when you don't provide documentation for expenses, you're thinking, I probably misplaced them, that's fine, but I know I incurred them, so let me write. From the taxman perspective, you have put expenses there that never occurred.
Never. Yes.
So you are doing it on purpose
On
to
purpose,
understate
to
your
understate.
profit.
Ah,
Therefore, we're going to penalize you.
Exactly. So it is important for you to always have that evidence.
So this penalty could be 200% of what?
200%
Of the tax
of
that I
the
paid,
tax that you yes.
that I'm paying on the misstated amount.
Yes.
That's a penalty. And then interest?
Yes, then interest is charged at 1.5% per month, and it is compounded. So it will just depend on
how many months.
How many months. So if it's 60 compounded 60, if it's 10 compounded 10, so on and so forth.
So if I'm found to have or understated my profit for maybe 4 years ago, the interest will be for every month from the past 4 years.
Yes.
Because I'm not able to provide evidence of the expenditure that I'm saying.
Exactly.
I incurred those 4 years ago.
Exactly.
Yeah.
So that's why it's important to keep records. Then, apart from that, there will be instances where maybe we may claim a refund or a rebate from the tax authority. This sometimes apply mostly to the manufacturing industry,
right? Where
they've imported some raw materials and they produce goods. Then when exporting those, they have you can claim a refund from the tax authority to say, look, I bought this material outside, but now I've since exported it. So they can make a claim. But you can only make a claim if there is documentary evidence that indeed you have imported and now you have exported. So you will need those import and export documents to show as evidence that indeed there was those. So sometimes it will take a month, of course, for you to produce those goods, or more than that by a long period. But despite that, you need to ensure that you keep that so that you can be able to claim. And if you are producing large quantities, it can be a lot of saving for you as a business, especially in times where cash flow can be a problem for
the business. So this one you're talking about where maybe it would vary from country to country if the government in that country has chosen certain industries that they say if you are in this industry you get a rebate.
Well, generally these are World Customs Organization rules. So for every country that follows those rules, we find that they are universal rules. I think in the South African Customs Union and even to a certain extent South African Development Community, SADC and SAC, we use the same rules
as Botswana
for customs.
So chances are, even if somebody is in Ghana, if the government is subscribing to the same international laws, it's similar.
It's similar. So it's really more of a universal rule from the tariff books.
To get it a rebate, but you get it with your records.
Yeah, you get it with the documentary evidence. So it is important to ensure that every time you file those, and also you keep reminders when you finish your production cycle, if you are in this kind of industry, to ensure that it is now time to claim. Yes.
Okay, so the claiming also applies to claiming back VAT?
Yes, claiming is, you will find that it is VAT, customs duty, and excise duty. Yeah.
Which, in this case, you are buying. Are you talking about exporting? Where are we?
Okay, no, it's for on the raw materials that you would have imported, and then from there after you export those goods,
right?
You claim back.
I see.
Yes,
I'm following.
Lovely. And then now going into your indirect exports. So for exports, it can either be a direct or an import one. A direct one, when you are buying from that country, you fill in the forms, and then when you get there, you say, this will go back to my country. I'm importing them. I'm not a citizen of this or a resident of this country. And then they zero rate, meaning they do not charge VAT on what you are buying.
Okay.
Yes. And then sometimes you buy there.
So in that example, if I am an entrepreneur based in Botswana and I'm buying from Namibia, the supplier in Namibia can zero rate my goods and I don't pay any Namibian VAT. So I just get them into Botswana without any VAT. Okay, that's scenario one.
That's scenario one. But sometimes that doesn't happen, and you go there and get the goods, they charge you the VAT there. So when you now cross the border, you find their agent there. So you need to show their agent the cross-border documents that if indeed you have declared those goods and now they're in Botswana, and you show them the invoices and that you have indeed paid for those goods, and then they give you back the claim for VAT.
Yes.
Yeah. So those documents, those cross-border documents are important for you to be able to claim such. Yeah. So
if they're not there, you don't claim.
If they're not there,
you know, when you say that, I remember one entrepreneur friend of ours who was saying this needs to be taught to our employees, because usually the people who will carry the goods on behalf of the company is the drivers that we employ. You know, so if a driver doesn't know the importance of keeping these records, then when you try to do the claim, you can't get a claim. I remember he gave an example of the numbers to say even the numbers on the documentation have to match, and you have to, in a sense, make sure your driver understands that.
Yes.
If the number on the one document says 1002, you can't have the other one say 102 or 10002.
Yes.
If those numbers don't match, you are not able to claim, or maybe it can take forever.
It's important also to have a good culture in the company or in the business.
Right.
As an entrepreneur, set the tone at the top, because whatever you do, those at the bottom
Will do the same.
So if you have created a culture of compliance, then you wouldn't need to worry about anything else.
Yeah, a culture of keeping records, so people just know, and it becomes like second nature.
Yeah, it becomes second nature to you. So it is important to keep a culture of keeping records
As an entrepreneur.
Yes.
Good. I'm following.
Now, moving from the core to the issue of tax registration status.
Okay.
You should know what tax to register for when as an entrepreneur.
Yes.
Most entrepreneurs believe that there is a certain threshold that you are required to register. This is because, like for VAT, for instance, there's a threshold. So then they apply that to income tax. While in fact, for income tax, there is no threshold for registration. The mere commencement of business means you need to register for tax. And
for income tax.
For income tax.
Right.
And we should always separate, when it comes to businesses or companies, we should always separate the issue of paying tax and registration. Yes, because those are two different things.
Okay.
Yes, they're two different things, because when we have registered, that's when we can determine if you have to pay tax. Yes. And then a registration is just cut by commencement of business. Yes. And then of course for VAT, that's when issues of threshold comes in. Like in Botswana, there is the 1 million pula that you need to have attained.
Let me ask you, what I hear you saying is VAT in most jurisdictions has a threshold. Right, that's what you are about to get into.
Yes,
but income tax, the mere fact that you have started business, you should register for income tax. Right.
Yes.
It doesn't wait for you to say when you get to such an amount. No. As soon as, even if your business is making $2, register for income tax. Okay.
Yes. Then moving on to the thresholds for VAT. Examples in Botswana, we have 1 million. Kenya has 5 million Kenyan shillings, and next door in Namibia they have 500,000 Namibian dollars.
Right.
Yes. So when you reach those, that's when you need to register. So it is important as an entrepreneur that you track your revenue.
Right.
So that when you hit those thresholds, you immediately register. Yeah, because if you don't,
I don't track my revenue.
You don't track, and then you lose out on, and then you are at 2 million and you haven't registered.
Yes.
And then they can come in and say you should have registered a long time ago.
Yeah.
So give us the VAT. And what people should know is that as long as now you are eligible and you have not registered, whatever that you get is deemed to be inclusive of VAT. So they say that no, you've been charging, so pray. And
Whoa.
then penalties and interest also they will apply in there. So you can't say to them, no, I didn't charge, so
Yes.
this amount doesn't include VAT.
No, you are
They will
deemed
say
to
you
have
are
been
deemed to
charging.
have been charging.
Wait. So what you, if I have a business and I'm based in Kenya, and the law is that when my business reaches 5 million shillings, I should register for VAT and start charging my customers VAT. And so you're saying track so that
Yeah.
at least you know by the time you get to 5 million, you
Yes.
register for VAT.
Definitely.
Otherwise, if I had been charging my customers 10,000 shillings for a product and I reach the 5 million and I continue, I don't register for VAT. I continue charging my customers 10,000 for the product. The taxman has the right to say, from the time you started making 5 million in total revenues, the 10,000 that you charged everybody from that point on, out of that 10,000, we take this much as VAT because we deem it that you were supposed to have been charging VAT, therefore you were charging VAT. Whoa, 10,000 that used to be wholly for my business. Now I'll be given the taxman because he says you were supposed to register for VAT so that you charge your customers VAT. Now this 10,000 that you've been charging, we now take from it. And so what are you saying? There's also a penalty over and above that?
Yes.
That is a penalty enough for me.
Well, we have a penalty over and above that.
How?
So you should always track that. And another mistake when it comes to tax registration are for social entrepreneurs, especially those that don't use companies, but use different modes to conduct their businesses,
Yes.
whether it's a trust or whether it's a society or an association registered at the Register of Societies.
Yes.
They will assume that because of the mode of business that they are using, they are not required to register
For
income
VAT,
tax
for income
or
tax.
even for VAT.
Yes, we normally think that NGOs shouldn't register for VAT, for tax in any way.
But that's a big mistake.
Charities, churches.
Churches. As long as they like for VAT, of course, as long as they have business income, then they can register when they reach the 1 million. But for income tax, just as soon as they've registered and they're starting their activities, whether they have business income or not, they should register for tax. Yeah, they should register for tax, file the
Tax
returns.
returns.
Yes, so it is important that they are aware of those.
Like like every child.
Yes.
Like one
Indeed. Yeah, so it is important.
Right, I'm careful so my students can understand us from everywhere.
Yes.
Okay. So that is registration.
Registration.
I am laughing, when you talk about VAT registration and the threshold, because from our business, one of our businesses, we thought we were being proactive. So we went ahead and registered for VAT just when the business was starting. Before we hit the 1 million pula threshold, we had already registered for VAT. And we thought we were doing the right thing. We're very proud of ourselves. We went ahead to start charging people VAT on every sale that we make. Ignorant, I know. By the time we woke up to this, we were owing the taxman 32,000, I think. And the taxman said, you were not supposed to have registered for VAT because you were not yet above the 1 million pula threshold. But now that you have charged people VAT, we want it. So you have to bring it. And so we had to clear this regardless of the fact that you were not supposed to register.
Yeah.
So could you explain to me then deregistering? What is the option there for one to deregister? What is the taxman saying?
Yes, as soon as you are below the threshold, they will require you to deregister.
Are there any rules
Or in
around
some
deregistration?
instances, they will write letters to you, and if you had registered and you're not supposed to register, and now you have some significant assets,
Yes.
you lose out because they will deem that by deregistering you are disposing those, even
Assets.
though and you pay VAT on them.
Whoa.
Yes.
So they will take the value of my business assets and they will charge a VAT
They charge
amount
VAT,
on it
yes.
when I'm
When
deregistering.
you're deregistered.
So I'll pay that VAT.
Yeah. So in Botswana, they use the market value of
Yeah.
those goods,
Whoa.
while in some other jurisdictions they will use the cost.
Other jurisdictions like which ones?
Yes, like South Africa, Namibia,
Ah.
even Kenya, they use the cost, but Botswana currently uses market value.
So, but what you're saying, the bottom line is when you're deregistering, you will pay.
You will pay.
If you have
So-
assets there, you will pay.
You will pay.
These ones in Kenya, South Africa, and Namibia could maybe pay on cost.
On cost,
The cost
yes.
of your assets.
Yes.
Okay, but for us it's market value. That's
Market
quite
value.
steep.
Yeah. So
So it will be that
it will be a nightmare
a charge for me to deregister for VAT.
to deregister for VAT. So that's why they when you deregister, they both when you register and you deregister, they will request the list of your assets. Yeah.
So if you don't have assets, you're good.
If you don't have assets, you're not.
You just deregister and you go.
Yeah, and you go. There won't be really much to pay.
Right.
There's what you call prohibited input tax for VAT purposes. So these are really legitimate business expenses incurred by the business, but then the taxman doesn't allow you to claim them. So in Botswana, you have like your hotel accommodation, beverages, food, your tobacco, anything that is amusement, recreation or hospitality. So even if you are going on a business trip, you're sleeping in a hotel, that's VAT that you are charged. You are not allowed to claim it. So from the government perspective, is to protect their revenue,
Okay.
such that you don't end up claiming private expenses, because you can disguise them as, especially for hotels and the like, even for food and beverages. Yes.
So what are you saying? Are you saying that these would be expenses which are legit?
Which
they
are
are on
legit,
my company
yes.
record,
Which are legit.
and the taxman does not recognize them.
Does not recognize them. Different quarters, your business, Botswana, for the Botswana context, your big guy have been trying to push that, at least the hotel accommodation where you are on a business trip,
Yes.
you can be able to deduct for that, and there's still discussions.
But what about other jurisdictions?
In other jurisdictions, as long as it's a legitimate business expense, then you don't have to worry about them being prohibited. You can claim. Yes.
When you say you can claim, you mean they would recognize them if you deducted them from your expenses.
Yes, if you deducted, they will recognize such.
So that's another mistake that we make. We don't know about this prohibited
and then you end
expenses.
up claiming.
Yeah.
Then during audits, it is covered that you have claimed. They write that back. You pay penalties, pay interest.
Hey.
So
Then the cycle continues.
Yeah, and the cycle continues.
Oh, so wait. If I have claimed as amongst the list of expenses that I put down as an entrepreneur on the business records, and I've put some of the expenses that the taxman considers prohibited, they don't recognize them as legit business expenses, even if they were legit. Like in this case, if I go on a business trip, which is what our business does a lot. I go on many business trips, and the taxman does not recognize any of those expenses as legit business expenses.
Unfortunately.
Because I could have been on a joy trip with my family, and I put it under the business. That's what they're saying.
That's what I say.
So if I include them, because for us, we're thinking they're legit, we travel a lot. We go to Kenya, Ghana, we go to Zambia, and we recognize, and they are the biggest part of our expenditure actually at the moment. So if I included those and the taxman doesn't recognize.
Yeah, and remember, specifically here we are talking
Just from a VAT perspective, not from income tax.
Not from income
okay.
tax
So I was going crazy because I was thinking.
Going outside, then you don't have to worry about it. But if you have gone to a trip in Kasane or Tana or Seroe, and then you pay accommodation and you are charged VAT, then
it's claimable.
And that's where the problem is. Yes, from a VAT.
From a VAT
that
perspective.
VAT that you are charged,
you can't claim it.
So
that's why you use the word claim. You can't claim it against the output VAT. Okay.
Yeah. So it is important to and then another prohibited one is what you call passenger vehicles. So passenger vehicles are anything that is not a commercial vehicle, like your trucks or maybe a combi. You are not allowed to claim input when you have bought for your business. So if you are buying a motor vehicle, for example, or anything that the definition is anything less than 9 passengers, except for a single cab, then it is just considered a luxury that you may actually be using it for your own,
for my own good,
but you are buying
disguising
it as a business.
So if my business buys a Toyota Fortuner,
unfortunately you can't.
I can't claim the VAT that I paid, but I'll be paying VAT on that Toyota Fortuner. But I can't come and claim it against my output.
Yes, against the output.
Yeah. And if I didn't know that, I'll probably. That is why maybe that friend of mine bought a mini bus for himself under the business. Maybe that's why it has to be 9-seater plus to be able to offset it against the output tax.
Exactly.
That's a mistake I can make without knowing. So the tax man is guarding against the situation where I'm supposed to buy that Toyota Fortuner on my own expense, but I put it under the business and I want to claim.
Yes.
I see.
Yeah, because of course, if you are buying it under your personal name, you are not a business,
so I won't be claiming. Yes.
So,
smart tax man.
Yes. Yeah. Then a part of that, they can be what I like to call or term out of norm claims. And normally we use the term notional input tax.
Notional input tax.
Yes. So you are VAT registered. And you are buying an item from someone who's not registered for VAT.
Right.
Yes. And let's say it's 114,000. You are buying a motor vehicle. And this motor vehicle is not a passenger vehicle. Let's say
it's an allowable one.
Yeah, let's say it's a truck.
It's a truck.
You are buying it for 114,000. This person is not registered for VAT, but because you are registered for VAT, they can say you can be able to claim VAT on this by applying the
VAT amount.
Yes. You apply the VAT fraction.
Yes.
And you determine in this 114,000, you get the 14%.
Right.
Of that. And then
as a business, and we use it as input tax.
As input tax.
Okay.
And you are able to claim that amount.
Right.
Yes. So that's one of the.
And meanwhile, you didn't pay that VAT. So is that an incentive also for companies to be VAT registered?
So that is an incentive for those who are registered.
I think I understand. So if this was 114 and I actually paid VAT on it, then in either case I would offset because I have paid. But in this case, I'm probably buying the truck from my cousin and he's not VAT registered. But I can claim VAT out of it because I'm VAT registered.
Yes. But remember, going back to the earlier mistakes on documentation, you need to show us that you've paid that
for that truck. Okay.
Yes.
So what is the mistake we make here? We don't claim. We don't know of the out of the norm claims.
Yes.
Right.
So So
what value though do you place on an entrepreneur having an accountant?
It is important that one has an accountant.
Yeah.
Because the accountant will know a lot of things that happens in that space,
right?
And will be able to update you, will be able to bother you with those items,
which helps with compliance.
Yes, which helps with compliance.
But may I follow that question up?
Yes.
And say, is there any value then in engaging a tax consultant if you can, but you haven't? If you have an accountant, is there any value in engaging once in a while a tax consultant?
Yes.
Okay.
It is, because though people treat this as
one thing,
yes, they're totally different.
Right.
Yes, the accountant may have the basic tax understanding. Yes, because when you are doing an accounting course, you'll have a basic tax laws. But remember, for a tax specialist, they do that thing
every day. Yeah, that's why I'm an accountant and I make tax mistakes, and I'm like, I'm so embarrassed to even say I have made the mistakes.
But I think when using an example of doctors, an accountant is a general practitioner.
An accountant is a GP.
Is a GP.
And then a tax consultant?
Yeah, and a tax consultant is a specialist.
Right.
Yes.
Okay.
Yeah. So a GP will always refer you
to a specialist.
If
your eye has a problem, the general practitioner doctor can say, it's an eye issue, I need you to go to an optician.
Yes. So exactly.
Thank you. You brought it home. I understand.
So that's
right. And I know in the past you have been very uncomfortable if somebody says you're an accountant.
Yeah.
And you're like,
no. Yeah, because I'm not an accountant. I'm a tax.
You're a tax guy. Even though you have accounting background.
Even though I have accounting background. Then when it comes to movable property, still out of the norm claims, a business may maybe pay what we call transfer duty.
Yeah.
You will pay transfer duty if you are buying from someone who's not registered.
What is transfer duty for the sake of my students?
Yes, so transfer duty is basically a tax that you pay when buying property.
Yes.
Okay. In simple terms.
Yes.
So let's say the property is valued at 1.5 million. Or let me say 2 million.
Yes. No, a cheap property.
Yes, it's 2 million, and this is commercial property. And then maybe you are paying, the rate is 5%. You are a citizen, and then you are going to pay 5% on 1 million. That is 50,000.
1 million, not 2 million.
Yes, because there is an exemption. Yes.
That I know nothing about.
Unfortunately. So this 50,000, you can use this 50,000 as input tax.
So I can offset it against the output tax that I've collected from people.
That you've collected from people. Yes. Unfortunately.
But we normally don't know about this transfer duty, that it can be used as input tax.
Can be used as input tax.
That's another mistake. So if in that season I was supposed to pay 100,000 to the tax man as VAT that I've collected from people, which we call output tax, if I knew this as an entrepreneur, then I would claim this 50,000 and only pay the tax man 50,000.
Exactly. So those are the kind of things that
we are ignorant about.
You're ignorant of. You miss on.
Yeah.
Yes. And I think this is also a big one.
Okay.
That the tax man is heartless.
Right. That's a mistake we make.
Yes.
So please, this concept of notional input tax, where does it apply?
This is VAT.
Oh, it's VAT registered. I mean, in
Yeah,
terms
for
of
VAT
jurisdictions, does it apply across in the African continent?
It applies across a lot of jurisdictions in Africa, whether you're in Botswana, Namibia, Kenya, South Africa,
right?
Outside Africa, it's there.
Okay, fantastic.
Yes.
Because I think we ignore this out of the norm.
Yes.
Okay.
Then another thing is to think the taxman is heartless. People fear the taxman.
We do. When you mention the taxman, we tremble at our feet.
Yeah, people tremble, but that is not the case. The truth is that there are instances where the taxman can say, look, you owe me 300,000. In that 300,000, only 50,000 is the principal.
Right.
So if you can be able to pay me that 50,000,
we could offset the other. Taxmen can say that.
I'll write off the penalties and the interest.
We don't know that as entrepreneurs. We don't know the taxmen can be that understanding.
So most people just fear when they are given an assessment and their penalties, all they just want to do is to pay.
Yes, pay and get it off.
Pay everything and then, but there are avenues for you to negotiate, to say, look, my business is small, or come up with whatever reason that you want to come up, mitigate the circumstances. For those who are always go to court, they know that you can mitigate an offense to say, look, I have kids, so don't give me 5-year sentence, give me a 6 months sentence.
So I can come back to the family.
I can come back to the family. I'm the one feeding them.
Right.
So the same concept
applies with the taxman to men.
And say, look, man, I owe you 2 million, and from that 2 million, only 500,000 is the principal.
Right.
So can I negotiate to pay it in this period?
And negotiate, and it's heard. I think we really make the mistake of thinking the taxman is heartless. I think also there's this saying that says ignorance of the law is not a defense. So we are always coming from the perspective that if I owe 2 million, for example, and I didn't know that I was supposed to pay the 2 million, maybe out of the 2 million, 500,000 is actually the principal, and the rest is interest and maybe penalties. I would be thinking, the taxman said pay 2 million. The fact that you didn't know one thing or know the other, ignorance of the law is not a defense. So we always think the taxman thinks in that heartless, narrow way and won't listen.
They're able to listen, and also they know that if the amount is huge, you may not be able to pay. So they incentivize you to at least pay something. Because remember, they are in the business of
collecting tax.
Yes. So whatever avenue is available that they can collect from you. Though they are open to using that avenue.
Right.
Look, it is better to collect 500 pula from you than nothing.
I remember.
Because if I try to chase the 2 million and not the 500,000,
I may get nothing.
I may end up getting nothing.
As a taxman.
Yes.
So I'd rather incentivize and say,
I'd rather incentivize.
I'll forgive you this one, pay this one. We don't think so as entrepreneurs. We run. I think in one of the sessions that we were with, one of our business managers said to you, during our discussion, is like one of our debts was reduced, and I was shocked in front of you. I was like, really? It was reduced? Because I was surprised that he was able to negotiate with the taxman. I thought you don't negotiate with the taxman, and I think because I made that mistake, many of my colleagues as entrepreneurs make that same mistake of thinking the taxman is heartless, he won't listen.
And I think just to give examples, recently in Botswana, I think for maybe 2021 and a half of last year, up to June 2022, there was a tax amnesty. Basically saying, look, pay the principal and I'll forgive you the interest and penalty. In Namibia, there was one in 2020 and 2021.
Wow. Was it pandemic related?
Not really, because I remember they were in Namibia, they were implementing a new system. Yes. So the incentive was to say if you are filing returns that you haven't filed online, we are okay, you are going to charge you penalties, yes, but you are only going to pay
the penalty,
the principal.
That was a tax amnesty.
Yes.
Was it not in this case because the taxman was on the wrong?
No, not really. They were not. They were not in the wrong. They were saying if you are filing but you have not filed, and there is something payable, and penalties and interest that you will waive those.
So we don't know that the taxman sometimes can say that.
Yeah.
That is a mistake.
Yeah, that is a big mistake. Yes. And then what I've seen happening to what we normally term as tenderpreneurs.
Tenderpreneurs,
is that you are buying a company from a company secretary.
Yes.
Someone who registers companies, and then they get you a tax clearance. You get a job from the government or from whoever.
Yes.
There's revenue coming in, and you are not paying tax on that, or you are not declaring, and you're always filing nil returns while you have income coming in.
Filing nil returns. That's a big mistake.
That's a big mistake. Because by filing nil returns, you are simply saying, I don't have any income. While in fact, you have
income. You know, I think it's okay. So I've heard entrepreneurs who have registered companies, and because the company is registered by an independent secretary, they sometimes don't know what was done. They don't even know that some tax was registered for, and that they're supposed to file all together. So those ones I get, you find they did not file all together. It's not acceptable because that's the ignorance we're trying to now address. But now you're talking about somebody who's literally breaking the law. They know they're registered for a tax. They even got a tax clearance to apply for that tender. They get the tender, they don't pay the tax, and they file a nil return.
Yeah. And sometimes it's, most of the time, it's not deliberate. Yes.
How? I'm already...
Look, it's because of lack of understanding. Because for those, as long as they have the tax clearance, that's what they know about, really.
That's all they know about tax.
They know about the tax clearance. They know about the SIPA return. Yes. Because the tax clearance, they know about the tax clearance, because for you to tender, you need to have
a tax clearance. We don't even know what the phrase tax clearance means. We just know it to be the name of this document that you get from the tax man.
KYC purposes, you need a tax clearance. Yes. But everything else, they when that expires, they know that you can renew. But they don't understand that for you to have to renew, you should have filed returns, declared
the money you are making,
you've made, and all that. Because they'll go back to that same company secretary and say,
I need a tax
clearance. Or they'll go to the revenue authority themselves and say, my tax clearance expired, and then they say to them, return is due, and they just fill a nil return and file without preparing financial statements. So that's one of the big mistakes that...
What does the taxman do when you have said nil return? Why are you saying it's a big mistake?
Look, when they discover that you've been filing nil returns,
meanwhile you're making money,
that 200% penalty comes in play. The interest comes in play. Yeah. So it's that then you lose out. Your company can end up being closed because of that. Yeah. So it is important for you to know that you need to prepare financial statements declared to the Revenue Authority.
Yeah, even when you're a small business.
Even when you're a small business.
Yeah, because I've had people who have asked me, what about if the business has been making losses? How does it work? Loss for three years maybe, or for 2 years and then a profit?
Coming to that one, if you are filing nil returns and you are making losses, because remember, when you are filing nil returns, it's not all the case that you will be profitable. There are some instances that the business is making losses. There is what you call an assessed loss, which can be carried forward.
Assessed loss.
Yes, which is basically a business loss. You can be able to carry it forward for a period of 5 years. Yeah, that's for Botswana, but in Namibia and Kenyan context, you can carry that forward indefinitely.
In the Kenyan and Namibian context, you can carry forward a loss indefinitely.
Yes. In Namibia, they've tried to reduce that to 5 years, but I understand the law is not in effect yet. Yeah, it's yet to be assented by the president.
What do you mean by that? Can you give us a scenario so I can see? Yeah.
So let's say let's do this. Year 0, year 1. So you are making a loss in this year. Let's say it's 2 million.
And that's a loss.
It's a loss.
Put it in brackets so I can follow.
Yeah.
The accountant in me is screaming.
Yes.
Yes.
So in the following year, let's say you've also made a loss.
Yes.
200,000.
Okay.
In year 3,
another loss.
You make
a profit.
A profit.
Okay.
250,000. So if you have filed a nil return, you are going to pay tax on the 250,000 profit.
Or if year 0 I said nil return, year 1 I said nil return. In year 2 I pay losses. Tax on 250.
You pay the tax. But if you have been filing your returns and you've been declaring these losses, by year 2 you would have accumulated. This is the accumulation side. So we add it. It's now going to 2,200,000. So in year 2, you offset the profit with this
against the losses.
Against the loss. Then what is left will be 1,950.
So then I don't pay tax in year 2.
Yes. You've made a saving.
I see.
Yes. And
so that's the danger of just saying nil return, nil return.
Paid 500,000, you can still offset.
Right.
Just going down to 1,450. I mean 1,450,000.
Instead of paying tax on that 500,000.
You make 750.
I can still offset it against the losses.
Against the loss, you're left with what? 700,000. You make 800, then you pay on the 100,000.
Yes, I still offset against the losses. So this one is the Botswana one says it stops at 5 years.
It stops at 5 years.
Kenya, Namibia still says you can offset as long as you can.
Yeah.
So what I'm picking is it's important to fill your returns and not just say nil return, nil return.
Yes. So
if
you
it's
need
a loss,
you need to document your profitability, determine your profitability prepare the financial statements, then
Give the tax man.
Can give the tax man. Say 500,000 loss or whatever, or if it's profit, 500,000 profit, and you pay the tax.
That's why you were saying filing nil returns is a bad mistake, even for me as an entrepreneur, because in this case, I could be benefiting in the years where I'm making profit.
Yeah.
And I must say, I'm not even judging entrepreneurs, because when your business has made a 2 million loss, you just get so irritated when you're supposed to report your profit. You're like, nil.
Yeah.
In a sense, you're saying, I made no profit. Instead of saying, no, I made a loss of 2 million. The following year, don't say, I didn't make any profit and then file a nil return. No, say, I made a loss of 200,000, because then over the years that you now start making profits, you don't pay tax on the profits. You can offset them against the losses that you incurred before. I'm learning a lot. I will not be seen filing a nil tax return.
Yes. And then the last one. I've seen a lot of taxpayers run helter and skelter because of this last one.
Oh, okay.
Leaving your tax affairs to third parties.
Big mistake.
Look, it is important for you to
have an accountant, to have
or
a
an
consultant,
accountant
yes,
dealing with your tax affairs.
right.
But you need monthly or regular reports to say this is how the tax status of the company is or the business is. I recently assisted one client where they have given a tax consultant a job to file their returns.
Yes.
And then it ends there. They only discovered that there is tax payable when now there was a demand letter issued
From the tax man.
7 million.
And meanwhile, the entrepreneur thought he had been complying because he has a tax consultant.
He's a tax consultant. Yes.
Hey, we trust the tax consultants the way we trust doctors. If the doctor says you're going in for surgery, you're like, take me now.
Yes.
So we do the same with the tax man. The tax consultant.
The tax consultant. See, they need to brief you, regularly to show that you're compliant and give you a compliance summary to show that no, this is how your tax affairs are. Is this due? Is this not due?
So where does the tax summary come from?
From the tax authority.
Okay, so they need to give me a document from the tax authority.
Yes.
So even if I'm an entrepreneur who's not finance inclined or numbers inclined, I should still see the tax return written tax man. If it's in South Africa, SARS. If it's Botswana, you need to see it say BRS. And it shows you where you are standing with the tax. I see.
Because if you don't do that, you are going
the consultant could just lie to you.
To get in trouble. Because, look, some people confuse having a tax clearance certificate for compliance.
Yes.
I can owe this 500,000.
Yeah.
And I can go to BES and ask for a tax clearance certificate.
And they would give you.
And tell them that, look, I'm applying for a tender. I can pay 100,000 now. And then they gave me a tax clearance. Then I pay the rest later. So the tax clearance certificate doesn't necessarily prove
that I'm compliant,
that your affairs are in order.
So if
because you can get it today and then you file something tomorrow and it creates a fresh liability.
So if a tax consultant gave me a tax clearance, it doesn't necessarily mean that I don't owe the tax man. That is news.
Yeah.
Because the consultant knows how to negotiate with the tax people and say, let's pay 100 now, we'll take the rest. We'll pay the rest later. And they come to me and give me a tax clearance. And I'm thinking, I'm good.
You're good.
So can an entrepreneur go and collect from the tax man for themselves? Isn't that advisable?
Yeah, you can go there and collect. You can check regularly how things are.
Yeah, like a tax compliance report of sorts.
Yeah.
So that's more advisable rather than to wait for the consultant.
Yeah.
Even if I have a consultant, I should still go to the tax office and request based on my name and my company. Say, can I see where I stand with the tax authorities? Okay.
It is important.
Does it add any value? Because you've worked with the tax authorities for so long, does it add any value if I owe the taxman and I go to the taxman and say, hey, I was owing this much and this is my plan? Are they more likely to listen to me than if they came knocking?
Yes. Look, those are what we call voluntary disclosure.
Right.
Yes, and in some other jurisdiction, actually, there are set out rules that are specifically set out for voluntary disclosure, that if you have discovered something and you want to declare, what are the rules and procedures to do that? Even here, you can do that and say, look, I've discovered that I haven't paid this such and such amount, so I want to pay. But you can waiver the interest and the penalty, and then they listen to you. Yeah.
But
so it's
better to come forward. Right.
Than them coming to you.
When they're knocking, that's when you will really see they can be heartless.
Yeah, that's when you see that now they can be heartless.
Yeah, but can an entrepreneur say, I didn't know this was my consultant? Can I blame everything on my consultant and the taxman would hear me? Or at this point now, the burden of compliance, I have to carry.
That's a general rule. The burden of compliance lies with you, the entrepreneur, because you're the owner of the company.
Yeah.
But like I said earlier, there are always mitigating factors,
right?
That you can use. It always depends on how you put the story. You can say, look, I didn't know. I trusted my consultant. There are cases, the case law.
Yeah.
That has established that rule that sometimes as an entrepreneur, as a business person, you can trust the consultant because they are a specialist, and you trust that in. There are people of integrity. Like for example, as a tax specialist, you may be part of the Institute of Chartered Accountants of your country.
Yes.
And there are certain integrity rules or principles that you follow, that you uphold. And sometimes if that has happened and they've listened, you can say, look, I trusted this person.
them.
These people are held in high regard to mitigate your case. But your story needs to be convincing if you are going to mitigate your factors or your circumstances using that. Yes, but generally the burden of compliance
lies with me. So leaving my affairs, my tax affairs to a third party, I should be on high alert.
Yeah.
Especially when the money is good. When the money is good, we're like, money is good. I'm out here chilling in Dubai, and you're thinking that your tax people are handling, your affairs. I saw a clip by Steve Harvey talking about the same and talking about how much he owed the taxman and he had to pay after discovering that these guys had not been paying, but they have been cashing from his account. And he thought the money was going to the tax man. So if it can happen to an entrepreneur at that scale, Steve Harvey, we're not immune. We need to just know, I guess I said it happens when the money is good, but I think also when the money is not so good, we get so busy. Entrepreneurship can stretch you so much. You're so busy. You're like, because I'm busy putting off fires, you handle the tax things and I'll give you the money to handle them. So in either case, really
and you don't get proof.
I don't get proof that it's getting done.
So, those are
the mistakes. Thank you very much. I have learned so much from today's class, and I appreciate you sharing this with us. We look forward to your classes, your courses, so that we can take these ones, piecemeal, and my people can understand, piecemeal. what we've shared. Thank you very much, Tumelo.
Thank you so much, P.
Wow, I've learned so much today, and I trust that you've also learned quite a bit. I'm guilty of many of the mistakes that he is talking about, but I think it's a good thing that we get to reflect and learn in this way. So we will not part ways without taking a little bit of action. I'm going to give you an action challenge. You could be running an entrepreneurial venture of your own, or you know somebody who is running an entrepreneurial venture, or you're planning to start your own entrepreneurial venture. Here's the challenge that I'm giving you to take away. Go and carry out tax planning. Go and challenge yourself and do a tax plan for somebody or for yourself, for your business. If you have a budget for your business, which is highly encouraged that you should, then create a tax plan out of it. Find out what it is that you could use from today's class, and maybe also from your own research to plan your tax. We are not saying go and evade tax. We are saying plan your tax so that where you can make savings, do make savings. And where you see that you've been a bit wasteful, then you can also be making plans to cover those wasteful inefficiencies. So please, that's the first one. The second challenge that I'm going to give you is to continue to learn about tax, because we could not exhaust the issues around tax here today. In fact, we have created a whole class that will avail to you shortly on tax and the different parts of taxation. My challenge is go and learn more. I'm going to do the same for myself. So keep learning more. Tax laws change every now and then. What you know today may be different in a month or two. So keep yourself informed, learn more about tax, and we meet again next time.
Now, let's go and do.